All right, good morning. My name is Alicia Metter, and I am the Economic Development Manager for the City of Lynchburg. I'm here with Corbin Rice from Brown Edwards. Corbin, would you introduce yourself?
I'm Corbin Rice. I work here locally with Brown Edwards and Company, and I'm a senior tax manager.
Thank you. And we are here just to briefly cover some information about the Employee Retention Tax Credit. It's a program that was initially instituted in 2020 under a lot of the CARES Act funding that was coming out from the government. This is one piece of that. There's a lot of different information, I think, coming at everyone from different angles, and it can get a little confusing as to who qualifies for what and what's worth it, what's worth the time and the effort. Can you stack things on top of each other? What does that look like? So there have been some changes recently to this as well that we think a lot of our local employers will be really interested in. So if you could just, I'll let you take it away and we can go from there.
Well, we have fielded quite a few questions from our clients in terms of the employee retention credit, wanting to know what it is, what do we do to qualify at a, from an overview level, what are the things that we need to look at to see if it's something that we need to dig deeper into. So basically, the CARES Act established a refundable tax credit that was designed to retain and continue to pay employees.
Okay.
So when the credit first came out, when it was first established, it was based only on the qualified wages from March 31st to December 31st of 2020. Fortunately, the 2021 Consolidated Appropriations Act has expanded the definition and has also extended the provisions. Okay. And so that now January 1st to June 30th of 2021 are also included. So basically your first and second quarters of 2021. There are a number of changes, and depending on whether you're looking at 2020 or 2021, it may vary what you have to look at. So from our standpoint, what we're doing with employers is basically asking two questions. Were you affected by the government shutdown? And did you have a significant decline in receipts? So the first part of this is we're going to look at 2020. We're going to look at your quarterly gross receipts as compared to 2019. So for example, if in the second quarter of 2020, you were less than 50% of your quarter in 2019, you qualify for the employee retention tax credit.
Okay.
Now that's oversimplified, but that's kind of your first base, is if you look quarter to quarter for 2020 against the applicable quarter for 2019.
Okay.
So in looking at that, that would be your first gauge. Now there's some things that, like, say you had a terrible second quarter, you bounced back in the fourth quarter and you doubled your sales, that might end that period of time. But what we're going to do is provide some more specific documentation and examples in a PowerPoint slide, and we'll have that dropped down for people to review so it shows more specific examples. But so really the first question is, did you have the significant decline? If you didn't, you may still qualify for 2020. So if you were affected by the shutdown, you had to close your business, that may automatically qualify you. Okay. So those are the two basic factors that we're going to look at. From that point, we'll get into a little bit how to claim those credits. Okay. You can go back and amend your 941 reports for your payroll tax to claim those credits. And so originally they were going to allow you to only offset the employer's portion of the Social Security. But the way it works now is they've expanded that definition. It's much more permissive, and you can apply it directly against your employer, the employee portions of Social Security and Medicare, and also the federal income tax. Okay. With that being said, say you've already paid your payroll taxes, you amend your 941 report, that money is refundable. Okay. So it can be refunded, it can be applied against other quarters. So that money is not lost for 2020. So what I would suggest is, if you have a paid preparer or you're looking at this yourself, is to take the time to look at your gross receipts. Okay. quarter by quarter. Now, we've had questions for people that were fiscal year end, or they had a 3-month consecutive period where, they had the decline, maybe not the natural quarter. The guidance has kind of been silent to that, but in reaching out to banks and other research that we have, I think it at this point is still a natural quarter. So say, for example, you had a decline in May, June, and July, that wouldn't necessarily qualify you.
Gotcha.
So when you're looking at how much money does this mean for me for 2020, again, you can look at the qualified wages of $10,000 per employee, and it's a 50% credit. So the maximum amount that you could get in 2020 is $5,000 per employee. And that's certainly not anything that you want to leave on the table. Now, it may raise the question, okay, well, I've got the PPP money, I've had other incentives, do I still qualify? Well, the Consolidated Appropriations Act basically opened that up, where you could have received the PPP money and still qualify for the credit.
Okay.
What you can't do is double dip. So this is kind of where you really want to make sure that you understand the process, or you're working with somebody that understands the process. So you're going to want to first identify what wages factored into forgiveness,
Okay.
and then look at what's left, in that allocable time frame. And so I think that gives you an opportunity to maximize what you're receiving back for staying open during the pandemic.
Mm-hmm.
The other thing that we have kind of talked about, if you haven't already done your forgiveness applications for your PPP, a lot of people have said, okay, well, with expanding it to the 24-week period, I've got enough payroll, I'm just going to use payroll. I'm not going to take the time to document my utilities, my, rent and those kind of things. Well, if this comes into play, you certainly want to take the time to preserve your wages to allocate it toward this credit. So it may be worth the extra time to provide the documentation.
That's a great
So
point.
that's kind of a planning point that you're going to want to think about.
Mm-hmm.
Now, that is for 2020. For 2021, the guidelines are much more generous. So for the first quarter, I'm just going to look at a quarter by quarter basis. So say, for example, for the first quarter, I had a 20% reduction in gross receipts as compared to the same quarter in 2019. That qualifies me. So as opposed to a 50% significant decrease in 2020, I only have to show a 20% decrease in 2021. The same thing goes if you're shut down by the government, no double dipping with the PPP. So this really is going to take some planning, to maximize the credit. Now, it's much more generous too in terms of what they're allowing you. So for per quarter, $10,000 of qualified wages is eligible for a 70% credit. So you could, in theory, if you had the qualified wages, have $7,000 in the first and second quarter for the same employee. So your maximum for 2021 is going to be $14,000. So you definitely do not want to miss these opportunities. And it's going to take some planning on the part of you as the employer and working with your accountant to stay ahead of it. You're going to want to look at your gross receipts, maybe 1st of April and 1st of July, and just to see if you qualify.
Quick question on the kind of the stipulations for the way the money is being used. If someone got this in 2020 already under the old stipulation, so let's say if they got PPP before they couldn't get it, there were a lot of different rules in 2020. If they already filed and got what they could in 2020, they can still go back and amend that and add in the other parts of it. Is that
right? So, for example, if you had an employer that didn't apply for or file the paperwork to receive the credits, and they've already paid their taxes, they've already received their PPP, what they would do is go back and make the determination, and you could amend your 941 reports to get those credits. And in the slide presentation that we're providing, there will be detailed forms, instructions, common errors to avoid. And there are quite a few resources. And while that's great, it's also confusing.
Yeah, yeah.
There's some tools out there available, some worksheets that you can kind of go through and plug in your numbers to see if you apply. Another thing that we're running into is that if you have not identified wages that were paid, out for sick leave, that were recovered, if you don't have some kind of tracking system, it's a little bit confusing, but it certainly is worth going through the exercise of doing it.
Yeah. And then with the double dipping issue, so giving a hypothetical situation, if someone got PPP, but they used it for rent, utilities, like they funneled it towards that more than specifically payroll, they could use this for the same timeline.
Right. Now, with the PPP to get forgiveness, there was a percentage that you had to include for payroll, so you certainly would have to allocate at least that amount. But it would give you, like say, for example, you had the 8-week forgiveness and you had used the payroll, for April and May, to cover that. Well, you still have June through December as eligible wages potentially.
Okay.
So, like I said, I think that's going to come down to being very selective about who you're reaching out to for help. I mean, most reputable preparers have done their due diligence trying to, get prepared for this information. I know at our firm, we have a whole team devoted to just COVID-related incentives and issues to make sure, because it's ever changing.
Yeah, yes, it is. Go ahead.
So, a lot of the questions too is people are like, with the shutdown, if you have any questions, there's frequently asked question that we're going to give you some links to on the IRS website, and they specifically give examples of, what qualifies you under that category. So that will help.
And if someone has received CARES funding from our that came through the local program, they can still qualify for this as well. It would just apply with the same stipulations surrounding you can't double dip into the same time period.
Right. That's my understanding.
Okay, great.
Another question that we're getting a lot is, what constitutes qualified wages? What are the, and that differs between employers, depends on whether they're considered a large employer or a small employer. So effective March 13th to December 31st of 2020, large employers are those that had more than 100 employees in 2019 on average. And small employers are those that had up to 100. So one was over, one was under. Now from January 1st to June 30th of 2021, the large employers are those that had more than 500 employees.
Oh,
so it's much more gracious in terms of whether you qualify as a small employer or not.
Okay.
The definition of a full-time employee for this purpose is going to be, an average of 30 hours a week, 130 hours of service a month. So basically what we all consider a full-time employee. For a large employer, qualified wages are going to be what an employer pays per quarter, even if the employer is not providing services because they've fulfilled either through the business suspension condition or the gross receipts, because there are people that are getting paid, whether or not they're reporting to work.
Yeah.
Qualified wages do not include qualified leave wages. So say, for example, if you had paid someone under the FFCRA, that wouldn't qualify. So again, it's just good when you go in to review this is to make sure that these are our wages, these are the reimbursements that we've received. This is family leave, this is regular time. It's just better to have all of those things kind of in their own little buckets so we can look at it and give you good advice.
Yeah. It really sounds like a large number of employers locally would qualify for this, but each situation is going to be very individualized.
Yeah, it's very difficult to, say on a broad spectrum, you qualify if you meet this one guideline, because there are so many things that factor into it. However, it's not a complicated process. It's basically just a matter of getting your information together.
Okay.
We have found that ADP, QuickBooks, and I'm sure other software providers have a lot of reports that have been set up specifically to determine what these qualified wages are. And again, in the slide presentation, we'll give you some specific names of reports or things that you could run through QuickBooks or ADP that will give you that information to at least sit in front of your accountant with.
Awesome. Great. Anything else that, we need to cover today? Again, I know the PowerPoint's going to have all the details, so we don't need to get way down into the weeds, but anything else?
I think the main thing is just to remember that you really need to look at 2020 under one set of circumstances, looking for, did we have the shutdown? Did we have the 50% reduction in gross receipts? Going forward, you're going to pay attention to if you had the 20% reduction from 2021 versus the same quarter in 2019. Okay. And like I said, just making sure that you keep good documentation of what you've had. If you come into us and we're looking at things, there are going to be a list of questions that we're going to ask you. And that's going to be included in the presentation too, if you want to look at it, of what you need to have in hand to review your eligibility.
Great. That's great. Well, thank you so much for taking some time to explain this. I know you guys have fielded a lot of questions, and we get questions all the time about, is this the same thing as this, or is this different? And so this is very helpful. And we will post, along with this, we'll post the PowerPoint as well, so that way people can go through at their own time.
There's frequently asked questions through the SBA and through the IRS websites that are, very good. I did notice on the IRS website, their updates, but some of the frequently asked questions still apply to the old guidelines. So just be careful that, if you're researching information, that you have the most current information, because things are very different than what they were 3 months ago. So kind of pay attention to the dates of the information that you're looking at.
Okay. That's really good to have. All right. Well, thank you so much. I really appreciate it.
Thank you. And we're always happy to help.
Thank you. We'll talk to you later.
Okay. Bye-bye.